We do have, like I mentioned, SPX had a big little pop on Friday and then stabilized very nicely above that 4,300. We had an intraday open interest. I thought we might push a little bit more to 43.35. We hit 43.22, so I came way short on that one. But anyway, the point is, it has filled the gap. It's still above this trend line. Open interest is still moving higher, right? 43.50 into that 4,400 is just absolutely not going to surprise me one bit. And we've got basically VIX on the ground. And instead of trading VIX, I really, really recommend watching SVXY. It has moved. You can see the green, right? That's the market bullishness. We are extremely extended. Hitting the 100, the 400 EMA is a kind of a resistance area, but it can overshoot. Anyway, the point is we've had very, very, very consistent days of elevated market and SVXY into the month end, into the quarter end. Qs are still bid. So we ended last week, by the way, still at that 355, right? So that 355 is a monthly resistance, and we are opening up above it. So that's important. We need to stay above it to be bullish. Otherwise, we can come right back inside, and that's your channel. But right now, that's a dang bullish opening. Can you see on the weekly? Right? So we tagged, and then this particular week, we literally, look how tight that doji is. I want to like how tight that doji is. Well, guess what we just did? We just opened up above the high of 355.83, which is so funny because this is from March 2022. So the fact that we opened above 355.80 is pretty dang bullish. Doesn't mean we're going to take off, just means that that's a nice open. All right, diamonds also decent. Oops, sorry. Right, the continuation above the 10-week, that was really, really key. And that was the Thursday morning. I said stalking a value rotation route, stalking value rotation, boom, right in the kisser on Friday. Biggest outperformance of large caps in 2 years. Inside day, boom, expanded. Now we got these digestion kind of candles. NYSE this morning is a little bit green with a decent open. Let me just see how the market looks. Diamonds, okay. Actually, diamonds are okay. We know Qs are actually looking pretty. But long story short, this is the level, 43.02. Do we stay above that? We can come back in with some little bit more vigor and break down. I'll be bearish. Otherwise, I'm still bullish. Micro cap. And then there's IWV, which is the Russell 3000. So for me, that rally is still continuing up into that 250. We talked about that last week. I don't see the rally done. Yeah, I'm definitely looking for the Q3. We got to get through the month, right? That's just not going to change. I still see the high potential of hitting 4,400. So that's all there is to say about that. And then Q3, we should see some volatility come in. But we got to get through the week and we got to get through the month. 430 to 435. Tomorrow we've got the CPI, and then we'll see what happens. But for right now, charts are still working on the upside. Volatility is not threatening. SVXY is really the one that I'm watching for a breakdown, and we haven't had it yet. So until then, market's running. Have a great afternoon. But what do we have? We have SPY spiking higher. So this is a lot of fun for me, just to kind of, put it out there. Do you remember when I talked about this yesterday? And I also had Michael update, right? My SPX Road Map. I'm generally bullish into that 43.73.22. We're going to use SPX in just a minute. 4,400 is obviously the largest open interest that serves as a magnet. 40, and then of course, this is what I had for price target, 435.72 for SPY. Now, this is SPX. It's very interesting to me what's happening. As I mentioned yesterday, 43.73.22. Where is that number? It's right here. This doji, remember I said yesterday we had a really smart, strong open, right? This was the close of this weekly. That's daily. That's hourly. So we closed, I said, 42.99. Let's round up. We opened at 43.08. And what did I say? Wicked bullish. So potential doji sandwich here. Measured move is a little bit bigger than this 43.73, but the point is 43.73. That's why I wrote it yesterday. Okay, we get above 302 area. It's obviously bullish. We get above on it. That's a different time frame. But the point is, we get here this 42.98, gorgeous continuation. There's just nothing wrong with that chart. That's all I can say about that. Same reason why I said an SVXY, I'll show you that in just a minute, but look at my levels that I gave yesterday, right? Above 42.99 equals 43.25. Above 43.25, you get 43.44, then 43.56, we're there. And why I wasn't bearish yesterday, remember I said SVXC doesn't look serious. It looks unserious. The only way I'd be interested is if this can really break that trend line, and we just didn't do it. And more likely what we're going to get is this 400-week tag overshot to 82.33, which is quarterly. So until the market can show me technically or in market structure that there's a rejection of these levels, the market is bullish. So, and I did right. If I'm wrong, 42.86 will come back into play, which is down here. I'm not wrong. It's too strong. So major support is still big picture, 42.1870, no question about it. But this is a doji sandwich, means it's a very, very strong continuation pattern. All right. And I also mentioned yesterday, we had a very bullish open. So here's a close on the weekly. 354.65. Here's a close on the weekly, 354.50, and we opened at 356.20. Very bullish. There's just nothing you can do about that. It's bullish. It's technically bullish. And then I watch the options market. Where's open interest, right? Where are they hammering puts? In other words, selling puts aggressively. It's forcing the dealers to buy up the underlying. There's just no question about it. We're in a serious risk of a melt up. So what's a melt up mean? So far, let me just kind of get this on an even keel if I can, like where there's I have no page that has nothing on it. When we get extended from this 10, the 10 week, we kind of stay near it for the most part, a lot of the times. Even, back in 2022, we pulled back, distribution, we bounce into it, we bounce even a little bit and then break it strongly, but we're really tight on that 10 week. You can see the 10 week is absolutely like a touch point. Until recently, we started getting a little busy. Now we're getting a little busier. The higher we go away from this 10 week is more problematic for a melt up. It's much healthier to come back and tap that and then move higher. But that's not what the market is in the mood to do. It is extremely pent up here. FOMO, for those who did not make it from the January effect or the bank bailout or the NVIDIA earnings. No, that was NVIDIA earnings. So they've missed the January effect. They've missed the bank bailout. They've missed the sentiment that was caused by the AI rally in NVIDIA. And they're off sides. All right, so now let's go over SPX levels. So this was yesterday. Obviously, it's not open yet, but let me just kind of go over this again because it has still worked. I can't even tell you how strong it has been. So, and shockingly to me, when we got back into this gap fill right here, right? I've been talking about this for a long, long time. This was the weekly gap down, which was a strong short signal. We did really great there. We came right down into my price target of 35.88, which I kid you not had been set months long ago. Like I literally wrote about that thing in April of like 2021. Doesn't matter. The point is it came down to a quarterly level and got supported with central bank intervention, massive. U.S., Bank of Japan, China, SNB, the whole thing. Anyway, the point is liquidity started flooding the market and the market started recovering. We had a little December dip. And then even though we had tech take off in January, the rest of the market really was languishing, right? We had this fall from grace. Remember, this is a weekly on the bank debacle. And then we had absolute bank bailout nirvana from Treasury, Fed, and White House. And this has just been literally green on the scene, little digestion. But remember I said we have to break this 10-week for me to get bearish again? We came really close, by the way, at 40.62. I put this big line in at the time and said, okay, if we can get back below, I'm bearish. It ended up being practically a 2-bar reversal, which means pennies between the two, which is very bullish. So kind of proceeding along this 10-week, this was a major price target. So everybody knows, because on March 28th, I did my SPX Road Map, and I said, I see this 42.18, 70 with an overshot to 4,300. And obviously we hit that. And then once we got to 4,300, I'm like, oh my God. So if we open above 43.02, 43.07 area, depends on the time frame, right? Because I've got this 43.07, I've got this 43.02. Anyway, the point is, boom, this week we did wicked strong. And I mentioned, like, this is a doji. So if we open below, it's bearish. If we open above, it's bullish. It's that simple from a candlestick read. Okay. So we did same thing with the Qs, right? Beautiful. We opened extremely well. This was my 355. Oh my God, so strong. So this is your huge expansion bar. And then we topped out at a monthly doji, and then huge, I expect, expansion bar. So I'm still in the baseline bet that we have the potential, despite the dollar yen doing what it's doing, we don't have the trifecta. We don't have the trifecta of 267,000 jobless claims, the 10-year above 3.9, and a steady Freddy dollar yen above 140.80, right? These three things have to happen. That's my baseline bet. Anyway, this is still pushing higher, even pre-market, when you can see this dip. Come on, they're getting all excited that, you know, big buyers are selling off. No, they are not. I've been studying this market structure, and it is still, from an option standpoint, wicked bullish. And it is what it is. So this is all I got to say about that. SPX very, very likely will tag this 44.27, area. Again, not a game of perfect, 44.25, 44.28, maybe 44.30. But the point is, it's heading up there. Now, what happens after that? I did show a little bit of my quote unquote forecast, if then, when we can head up to 46.60. And let me kind of show you. One, there's a lot of option flow in that neck of the woods. But the other reason is this funky chart that I do, that I showed you yesterday. Anyway, I showed it to you yesterday, 46.60. It's not in my library. And that's basically where I'm kind of stuck on that price target. And that's if we continue, right? So we can still break down. I'm not saying we're not going to, but for example, this is now support. We hit it yesterday with a gap fill, and then we bounced right back up. We could come back down to that 4,300. No problem. We could come down, 43.20, 7 to 43, 07. That's not my concern. My concern is we've got to break some stuff to get really bearish. We need to break 43.22 and then 4,300, then come down to 42.60 and then break that. Anyway, the point is we're not going to be bearish again. I'm not going to be bearish again until I can see this 10-year, as you know, I'm very, very, very fond of that, with a close below. So this 42.20 would have to break and close below. And then for confirmation that we're really going to see lower, this 40.62 has to break and close below. And then we can go back down and see our 39.50, our 38.70. You can't see it right here, but it's like 37.66. And then we get 36.100 down here. But we're not doing anything like that in the meantime. We're finally balanced to move higher, not lower.